And we're live. All right. Well, welcome and good evening, everyone. And welcome to Dino. We've got a very special guest tonight. Hey, Dino.
Hey, Andrew.
Okay. So just doing a sound check, making sure that everyone can hear us. If you can hear us, please give us a thumbs up. Okay. And so today is Thursday, the 8th of July, 2021. And I hope everyone is doing well. Hope everybody's staying safe and everyone is staying home. And Dino, just an update. We're in a full lockdown in Malaysia. In fact today,
Really?
yeah. I think the last time we spoke, it wasn't a full lockdown. It's a full lockdown now, and we had an all-time high today in terms of cases. 8,868, something like that. Yeah. So pretty high. So yeah, so full lockdown. Okay, so okay, we've done the sound check. Look, those of you who are just joining us, welcome. Don't forget to share, like, and subscribe. If you're tuning in on YouTube, click on the bell icon and choose all. So every time and anytime we go live, you're gonna get a notification on your mobile. If you're on Facebook, don't forget to follow us. If you're tuning in on Twitch, follow us as well. Okay, so hey, tag your friends, tag your family, those whom you think might be interested in talking crypto. Well, tonight we're talking crypto, but who's interested in the future. Feel free to throw in any of your questions when you throughout the thing as Dino talks or as I talk. Just throw it in onto the comment section below. All right. So now, for those of you who have been following us, we got booted off by or shut down by YouTube's AI, and I've actually seen that coming on Twitter quite a lot. A few other channels have had that issue, and so we've had to take it up with them. And so we decided to move our channel out, and we created it. Well, it's a new channel. It's called Future Proof and EquitiesTracker. So if you're on YouTube, do remember to sort of subscribe to us again or follow us again, and remember to hit that notification button. So tonight we're looking at alts because Bitcoin's kind of been a bit boring lately. So yeah, let's and we've got Dino the expert here to look at sentiment data, to look at on-chain data to tell us what's happening. So let's see. I think without further ado, I'm gonna let Dino introduce himself, what sentiment.net is, what they do, and look, if you're joining us for the first time, Dino comes on once a month, every second Thursday of the month. And it is always an honor to have Dino on because every time he comes on, not just for the viewers, I get a lot of insights when Dino comes on. So it's great to have Dino on every Thursday, every second Thursday of the month. And so, okay, Dino, take it away.
Thanks, Andrew. So yeah, obviously, just to introduce myself to people that might be seeing me for the first time, my name is Dino. I'm one of the market analysts at Sentiment. Sentiment is a sort of an all-in-one platform for token intelligence. So if you go to app.sentiment.net, you will find our main or flagship product, which essentially provides you with a lot of data about a lot of coins. So outside of just price-related data, which is what most price aggregators like, I don't know, CoinMarketCap and CoinGecko focus on, we provide a more broad spectrum of data sources and information about cryptocurrencies. So at the moment, we provide on-chain social activity and development activity data for more than 1,000 different coins. This obviously includes Bitcoin, Ethereum, all coins that are built on Ethereum or using the ERC20 standard, Ripple, Litecoin, Binance Coin, and so on and so forth. So yeah, we've been working on our platform for more than 3 years. We're still expanding our range in terms of both data and the new metrics that we're creating. So it's I would say it's definitely one of the most, if not the most comprehensive platform for people that are interested in learning and analyzing cryptocurrencies from as many angles as possible. And that's kind of what we're going to do today. One way or another is we're going to talk about both the on-chain data for several DeFi coins, as well as social data, and kind of just get a sense of where we are in the market. We can obviously talk a little bit about Bitcoin because at the end of the day, BTC is going to decide a lot about what the alts do as well. Although we have seen, and this is why I wanted to suggest that we talk about alts today and DeFi coins in particular, we have seen some decouplings from Bitcoin over the last 7 to 10 days. The first wave of decouplings was it was spearheaded by DeFi coins, coins like Compound, Maker, Uniswap, the Sushi Swap. There have been a fair few what people would call DeFi blue chips that have started to sort of slightly appreciate in price, at least compared to Bitcoin. So it wasn't like a sort of a segment-wide rally or whatever, but it definitely suggested that there is sort of an increased amount of interest in DeFi coins. And I think one of the biggest reasons why that is happening is because, as Andrew mentioned at the beginning, Bitcoin has kind of been boring at the moment. There hasn't really been a whole lot of places to look for entry opportunities. Most of the indicators from a technical standpoint have been pretty bearish. We have had another quite bearish indicator today. There was an ascending triangle, which kind of slipped into the downside today. So a lot of people seem to be predicting further corrections for Bitcoin. And so throughout this period of maybe a month and a half since Bitcoin's correction, I think there's a good argument to make that a lot of holders and people, some people call them degens or degenerates, people that are just trying to get an edge in the market in whatever way possible, they have kind of moved away from BTC a little bit into other coins. And one of the ways that we can kind of see that, actually, let me share my screen so you can see what I'm talking about as well. All right, so Andrew, let me know if you can see my screen.
Sure. Yep, I think it's just come on.
Okay, cool. Yeah, so one of the ways that I kind of did we track the amount of activity on a particular network and how that develops over time and what that does to other coins and their networks is simply by looking at the amount of daily addresses that are interacting with a particular coin. So what you're seeing right now is app.santiment.net. This is our flagship platform, a platform where you can find, like I said, more than 150 different metrics for over 1,000 different cryptocurrencies. And we begin with something pretty simple, or straightforward at least, which is the amount of Bitcoin's daily active addresses. So, I'm starting with Bitcoin just to kind of give you an idea of why I think some of the DeFi coins have been experiencing a little bit of an uptick over the last couple of days, even a week and a half almost. And a big part of it, I think, is the fact that Bitcoin's general network activity on a daily basis has experienced quite a hit since the correction. So I wrote an article maybe a month ago or so, mentioning that since the start of the rally, actually since the start of the year here in January 2020, all the way up until the all-time high, Bitcoin's all-time high here, Bitcoin's daily active addresses have fallen below 1 million only 9 times. Like, so basically since January 1st until here, April 15th, the amount of days that Bitcoin's daily active addresses were below 1 million has been very low. You can basically count them on your hands. And then since then, we have had a majority of days that Bitcoin's daily active addresses have actually been below 1 million. And in fact, here at its lowest point, we have had basically Bitcoin's daily active addresses drop by about 70%. Actually 60% compared to its peak both in April and May, all the way down to 505,000. This was also a year and a half, so an 18-month low for Bitcoin's daily active addresses as well, all of which seems to point to the fact that a number of participants in the market seem to be relatively inert at the moment, especially when it comes to the top coin. They seem to be interacting. So daily active addresses essentially just tracks the amount of unique addresses that are either sending or receiving Bitcoin. So we are seeing a decided decline in the amount of addresses that have been interacting with the top coin. Throughout this correction, we are seeing a continuing sort of decline. Yes, there are several sort of short-term outbursts or inclines, but they don't really last for long. Like, we have hoped that this would be a start of a recovery, but since then we have once again moved into this sort of a declining pattern for Bitcoin's daily active addresses. And in fact, what's very interesting about BTC is that right here at this point in time, when Bitcoin had hit an 18-month low as far as its daily active addresses, we put out a tweet that performed very well, and it was, I think, one of the top posts on the Ethereum subreddit on the day. At this point in time, Ethereum's active addresses have actually been above Bitcoin's active addresses for the first time in the history of two networks. So at this point in time that I'm just currently sort of circling on the map, on the chart, this was the first point in Ethereum and Bitcoin's life cycles that the amount of addresses interacting with Ethereum was greater than the amount of addresses interacting with Bitcoin. And I can share that with you very quickly here. So if I lock this metric, I'll lock actually both of these metrics. And then we move into Ethereum and we click once again on active addresses. This is what I meant. So I don't want to share the access. I want to show you kind of what this looks like. So this is the last year of data, but you can also see it on the all-time. Yep, there we go. Obviously, this gets aggregated because it's a very long. It's basically 7 years of data, but you can make it a bit more granular here by moving it to a daily scheme instead. And so this is a point in time. You can't even see it unless you zoom in. But the first thing that you can definitely spot is the fact that Bitcoin's daily active addresses have always kind of overshadowed Ethereum's, right? So the purple is Bitcoin, the yellow is Ethereum. Yes, there are several times where the two have kind of gotten close to each other, but it has never been a situation where Bitcoin's active addresses have fallen below Ethereum's. So let's now zoom into the last month of data, and you can see. Let me actually. Yeah, there we go. And so I'm going to move from a daily interval to, I think, a 4-hour interval should work. And let's zoom in. So it wasn't a long time. It only lasted for a couple of hours. Just make sure that I can show it to you here. Yeah, right here.
But it is historical nonetheless. First time in history,
yes,
right, Dino?
Indeed, right. First time in history, and you can you can see it here. So this is Ethereum and this is Bitcoin. So it lasted for maybe 3 or 4 hours that Ethereum's active addresses have gone above Bitcoin's right here. This is the shared access. So we've had 655,000 for Ethereum and 600,000 addresses for Bitcoin. Now, this needs to be taken with a caveat because at this point in time there was a lot of issues with block heights for Bitcoin. So there are sort of several technical reasons as well why Bitcoin's on-chain activity has kind of rescinded at this point in time in particular. However, even with that in mind, I think this is sort of a major milestone, suggesting that the flippening sort of has at least happened in terms of its on-chain activity for a short amount of time. And if Bitcoin continues to decline or even range, and if we see Ethereum and Ethereum-based coins, show any sort of strength, I think that this is probably going to become commonplace. Is that we are going to see sort of a movement of interest and engagement away from Bitcoin in the short term, and into alts. Right. So this is one of the reasons why I'm of the opinion that that we have seen this sort of slight uptick in Bitcoins, in alts over the last couple of weeks. Now, one thing that I also wanted to show is maybe a few weeks ago, so at the start of the month, before this sort of uptick that we've been seeing, I asked our data scientists to calculate the general amount of on-chain activity for a bunch of different cryptocurrencies. So I wanted to see what is the general trend in the amount of daily active addresses for Bitcoin, Ethereum, and all ERC20 coins. So let me show you what the results are. Let me see. I want a 6-month view. There we go. So 6-month view is good. Okay, so this first chart shows the amount of daily active addresses for Bitcoin, which is in green, for Ethereum, which is in purple, for Litecoin, and for a bunch of other coins as well. So we've done this once before, but we've updated it for for this month. And as you can see, the general trend has been down ever since the May all-time high for BTC. So basically, the moment that we started correcting or moving downwards, there has been a decided amount or decided decline across the board, with a few exceptions like Litecoin actually, that we've seen the total amount of daily on-chain activity drop steadily. So this is both for Bitcoin and for Ethereum. Like I said, this is like until the beginning of this month, so it doesn't include the last couple of weeks. And then I had another chart, this is it, showing the amount of on-chain activity for ERC20 coins in particular. So this chart shows the average amount of daily addresses that are interacting with ERC20 coins with a market cap of above $100 million. So basically, what we're looking here is the amount of activity with high liquidity, large market cap coins that live on Ethereum, that are based on Ethereum, right? So very clearly, we can see that the peak of daily on-chain activity as far as these coins are concerned has happened around the May all-time high for BTC. Since then, they also have experienced or suffered the same fate in terms of the amount of network activity on a daily basis. So it wasn't like until this month, it wasn't just Bitcoin that has sort of experienced this retreat in terms of general on-chain activity. It has kind of been across the board. A lot of people seem to have, well, for lack of a better word, kind of abandoned the network for the time being, stayed on the sidelines. Maybe they have pivoted to dormancy, but at the very least, they are very sort of anxious to interact with the coins. Now, the reason why this can be bad is the fact that sometimes sustained price rallies necessitate a high level of on-chain activity and a high or an increasing level of daily active addresses, because many people use daily active addresses as an on-chain proxy for a demand in a coin, right? So the more addresses that are interacting with a coin, the more demand for that coin is. And so it's sort of an on-chain proxy for trading volume. So what you want to see is this this sort of resolute uptick in the amount of on-chain activity for any coin that you're interested in, because it suggests that there's some fundamental justification for a sustained price rise. Because otherwise, if you see a price rise, you see the amount of on-chain activity decline, and I'm going to show you an example right now in a minute. It can be a bearish divergence, because it points to the fact that the price appreciation is no longer fundamentally justified, or justified in terms of the amount of interest and the amount of value that is being transmitted on the network on a daily basis, right, compared to the market cap of the coin. So with that out of the way, so it's just sort of a context of where we have been. So basically what you need to understand is that across the board, we have seen on-chain activity dwindle. However, over the past couple of weeks, and especially like the last week or so, there have been glimmers of hope in terms of the on-chain activity for some DeFi coins in particular. While Bitcoin's on-chain activity has still kind of continued to decline, we have seen several coins, and I wrote about this, let me see when. Let's see. So this is our insights page where we publish market analysis on a daily basis. Somebody from the team will always publish something interesting that they found in our data. And so this is what I wrote about. This was on July 1st. All right, so exactly a week ago. And I titled it The Comeback Season for DeFi. And in it, it was just a very short write-up where I said, look, for the first time in a while, we are starting to see the amount of addresses interacting with some of the biggest DeFi coins start to kind of buck the downtrend and move into the upside. So what you're seeing here is sort of a collage of 4 coins that I've identified. There have been more that I found were particularly interesting in terms of their on-chain activity as of recent. So the first one is Uniswap, the second one is Aave, the third one is Maker, and the fourth one is Compound. So all 4 of these coins, which you can definitely argue are all some of the most popular DeFi coins or DeFi-related coins that live on Ethereum, that exist on Ethereum, all of them have, after a period of decline, started to experience either a sort of a consolidation of their on-chain activity or an actual strength or an actual rise. And I've actually mentioned here that Aave's daily active addresses have increased by plus 24% since Monday. I think this was written on like Thursday. Maker's daily active addresses are up plus 97%. Uni's daily active addresses were up plus 72%. Compound's daily active addresses were up plus 72% as well. So sort of across the board, we have seen some signs, hopeful signs of interest moving away from top caps, and in particular Bitcoin, and possibly migrating to DeFi again, which, to me at least, it makes a lot of sense, right? So with that sort of out of the way, I'll show you what some of these coins look like today, because over the last couple of days, there has been a sort of a slight, once again, slight sort of plateau in terms of its on-chain activity. So let's look at a few coins. And then I'll give you one example, which I thought was very, very sort of strong as far as how you can use on-chain activity in terms of daily active addresses to predict market moves. So this is Uniswap. Obviously, today I think a lot of things are down because of BTC. Yeah. So take this with a grain of salt, but Uniswap's on-chain activity has sort of declined rather heavily up until June 24, basically at the bottom here, right? So we've gone from, even if we assume that this is an outlier, let's take the amount of addresses here. So from 6,000 addresses all the way down to 2,000 addresses, right? So that's what, 66% decline. It's not good. Yeah. You don't necessarily want to see that amount of decline in a month. So you've basically seen your entire interaction, the interaction with your coin shrink by 2/3 in about a month. It's not a great sign, even though 2,000 addresses interacting with your coin is still pretty good. Just to put it in perspective, there's not a whole lot of coins that experience that type of engagement on a daily level on Ethereum. There's maybe like 10 coins that have more than 1,000 addresses interacting with them on a daily basis. And that includes Ethereum and Tether and USDC, all of these stable coins, DAI. So there's only a few alts that really hold this type of activity. However, it's not just about the absolute numbers, it's about the trend as well. And trend has been definitely, sort of leaning on the downside. And so since the June 24th, yeah, go ahead.
Dino, sorry. Look, I probably just want to pause here for a sec and maybe just highlight to the viewers who are currently watching us to let you know, look, if you come from the traditional investing world, I mean, these are metrics that are never seen before, and these are you can see how transparent when you invest in digital assets, when you invest in crypto, you can see how it brings about a next level of transparency, the things that you can see with on-chain analytics, with and later on, if you're going to look at social sentiment, it is a metric that is difficult to measure in the stock market. You don't know how many people are because Dino brought up a really good point about the level of engagement with a specific coin or with specific coins. How do you actually see that in the traditional sense, especially if you're a retail investor? So that the power is at your fingertips, right? With tools like Sentiment.net, you get access to there's the data is there. Right, it's whether you as an investor are actually know how to use the data or have access to the tools, right? So that level of transparency, for many traditional investors, that's a new level of transparency. Okay, Dino, back to you.
It's unprecedented. So most of the metrics that we kind of draw from, especially when it comes to metrics that we take from on-chain data, it's the level of transparency that we've never before had in financial markets. Not only can you see the just general amount of interest, you can also see very clearly when people are sort of starting to move their coins to wallets that are labeled as exchange wallets. So that's sort of a very interesting indicator, because what it suggests is that now we can actually track the flow of funds away from private individual addresses to exchange wallets, which assumes that there's a rise in sell side pressure, because why else would you be moving coins to an exchange, right? But I'll get into that a minute from now. So like I said, Uni is one maker. Let me show Compound. So after a period of plateauing, we are finally once again seeing a decline, an incline here. If we look at Aave, I believe, a slight uptick here since the start of the month. Obviously, today it's everything is sort of down. And then I think I also wanted to check MKR. MKR has since then actually moved back to, or sort of stabilized at the same level. So this seems to have been largely a fake up. Now, the thing that I mentioned just a minute ago is the fact that outside of just the amount of addresses interacting with the coin, one other thing that you can use on-chain data for is also to gauge the amount of sell-side pressure. And I wanted to know particularly whether, how confident were holders of these coins, Maker, Uniswap, Compound, Aave, SushiSwap, iFi, all of these large DeFi coins. So many of them have started to accrue in value at least a little bit, like between 5 and 15% over the last week. So I wanted to know, has this sort of slight pump prompted some sell-offs, by holders? Because if they did, I actually don't think that that's such a bad thing, because it suggests that, it's probably negative in the short term, because it will, indicate that there's a rise in sell side pressure. It's going to be difficult for bulls to absorb, especially in this sort of a market. So it's going to lead to a short-term correction. But at the same time, it at least suggests that we're not sort of hyper confident in the market, and you don't necessarily want to buy when there's hyper confidence in the market. So one thing that I always like to look for is exchange inflow, and I'll go back to Uniswap first here. And exchange inflow, essentially what it does is it tracks the amount of coins that are moving from addresses that we at Sentiment have labeled as addresses that do not belong to any exchange entity, basically addresses that belong to you and me, moving to known exchange wallets. And like I said, the biggest reason why you would move coins to exchanges, especially in particular sort of volatile times in the market, is because you're looking to take profits and reduce your exposure. Now, there are a few more use cases for moving coins to exchanges recently. A lot of exchanges are now introducing things like staking for particular coins, but it is still a very, very minuscule use case for why you would be moving a bunch of money, a bunch of funds to exchanges at any point in time. So when we look at Uniswap's exchange inflow, and we look at its daily deposits as well. Daily deposits essentially shows the amount of addresses that are moving coins to exchanges, right? So it's kind of a supplementary metric. So both of these have sort of, once we've started to increase in value in terms of Uniswap's price action, we have seen, after a period of dormancy, we have seen an uptick in both of these metrics. So both the daily active deposits, or the amount of addresses that are moving Uniswap to exchanges, as well as the amount of Uni being moved to exchanges. Both of these have kind of moved to the upside. We can see the same thing for Compound, I believe. Yeah, so as you can see, sort of after a period of decline, as soon as Compound started to appreciate in value, we are seeing an uptick in its daily deposits. And if we zoom in a bit, you will see that there has also been a fairly significant uptick, sort of a stable uptick in its exchange inflow as well. So this is sort of something that I've also noticed across the board, is that as soon as we have seen people, as soon as we have seen the prices begin to appreciate, there has been almost a simultaneous uptick in the amount of comp, in the amount of all of these coins moving to exchanges, suggesting that people are taking any opportunity they can to reap some profits, because nobody knows what's going to happen tomorrow in this market. Yesterday I was talking to a few people, and they were pretty bullish about Bitcoin in general. There weren't any like major signs of a volatility to the downside. And then today, as soon as we've dropped back to 32.5K, I'm hearing a lot more talks about 28K, 24K is sort of next levels to look out for. So there's the market is very volatile, and these types of metrics suggest that holders of altcoins as well are not very they're not patient at the moment. So they're not looking to hold for any longer that they absolutely need to. They are in it to swing trade at the moment. So I think that as we see these sort of mini pumps for a lot of coins as Bitcoin ranges or consolidates, we are going to probably see a continuous uptick in the amount of sell side pressure, which is going to make it difficult for these rallies to be super sustainable. In other words, there's probably going to be a bunch of short-term corrections as people start to sell their bags along the way, right? So yeah, but I also now want to, so outside of zooming out of the sort of a macro perspective, I want to focus on one coin in particular and kind of show you our reasoning in terms of where we think a particular coin can go. So I wrote about Compound a few days ago. And this was July 6th. That was 2 days ago. Okay, so I wrote about Compound 2 days ago, and basically, let me show you. I essentially said, yeah, I said this might indicate an increased risk of short-term correction in the short term because a bunch of these metrics, and I'll mention them in a minute. But my conclusion was, look, it seems like there's a potential that we are going to there's an increased risk that we're going to move to a short-term correction and short-term price normalization because Compound seems to be kind of heating up a little bit too much for its own good. And since the publication of my article, the Compound token is down 14%. Now, obviously, the last day of data has also impacted that a bit more because everything seems to be down by about 2 to 5% as well over the last day. But Compound has actually started to correct even before today's Bitcoin crash. And I wanted to show why we think that has happened, right? So in this article, the first thing that we kind of mention is, let's move back to active addresses, just as an example. So this is Compound's active addresses, right? All of a sudden, out of nowhere, we have seen the amount of unique addresses or entities interacting with Compound go from 1,100 to a high of 3,700. So that's a massive inflow of new demand and new blood into this coin, right? And usually when that happens, it usually proves to be quite unsustainable. So if I zoom out to the last year of data, actually, let's look at the last 6 months. Yeah. So this is in no means the first time that Compound's daily active addresses have kind of surged out of nowhere, right? It happens every once and again. And usually what it does is it indicates that there's a risk of a short-term correction, right? If this type of on-chain activity proves to be unsustainable, or if we see a very short-lived uptick in daily active addresses, and then we immediately move back down, right? So we have seen it here, we have seen it here, we have seen it here, here. A lot of sort of short-term tops have been earmarked by this very short-lived uptick in on-chain activity. So first of all, let me explain why I think there has been an uptick in the comps on-chain activity. A few days ago, maybe a week ago now, Compound has introduced a new product called Compound Treasury, which essentially is trying to be an institutional bridge for DeFi, or a bridge for institutional investors to move into DeFi through a Compound protocol. So it has kind of brought a lot of hype back to the Compound protocol and to the Compound token as well. And so with this hype came a lot of new addresses interacting with the coin. So I mentioned in this article, in a couple of places, let me just find exactly where. Yeah, so I said, as you can see on the above chart, comp is no stranger to short-term spikes in daily active addresses, which often coincide with local tops and looming corrections. This would indicate that these activity spikes are often due to holders looking to take advantage of the rally, move their bags to exchanges, and sell for profit. And at the end here, I say that I would keep an eye on comp's daily active addresses in the next 5 to 7 days, because if they continue to rise, that's one thing, and it would suggest very strong, like, fundamental strength. And it would actually be a very good sign. However, if they revert back to normal, it might signal another price retraction similar to what we've seen before. So this is what we've had since then. And let me zoom in so you can see it a bit more clearly. This is what we at Santiment usually consider a very strong bearish divergence, right? We are seeing the amount of on-chain activity rise up to a point. However, at the same time, at one point, the price of Compound continues to rise, but there's no longer a simultaneous increase in the amount of on-chain activity, in the amount of addresses interacting with the protocol. There's all of a sudden a dissonance between the price action of a coin that is continuing to rally and the amount of interest in said coin, amount of demand in said coin. And this is something that we've actually developed several models around. We have a name for it. It's a price DAA, which stands for daily active addresses. It's a price DAA divergence. So when there's an uptick in price but a corresponding decline in on-chain activity, it is a fairly bearish signal, in our opinion, or at least in our experience. And then vice versa as well. If there's a clear decline in the price of a coin, but there's a strong, stable uptick in its daily active addresses, what that means is that the coin is currently somewhat undervalued compared to the amount of interest in the coin and the amount of value that is being transmitted on the network on a daily basis. So this is sort of the first sign that we saw that would suggest that, all right, we might be due to or primed for a short-term correction. And as you can see, this is today, this Bitcoin crash started here, but this is where Compound's correction started. So a couple of days ago, we were already very clearly starting to move into a downtrend. So this is one sort of a red flag that we saw for Compound, that we thought, okay, yes, there has been an increase in interest in the coin, but we don't think it's necessarily a sustainable increase. So that's number one. Number two, like I said, is the amount of exchange inflow, or the amount of coins moving to exchanges on a daily basis. So after a period of relative dormancy with at least just a few spikes across the board, there has been a clear uptick in the total amount of comp that is being moved to exchanges on a daily basis, suggesting that as the price of comp has started to rise, there has been a more concerted effort of holders of comp to exchange their bags for probably stable coins, but in general to move out of comp and take their profits, right? Another way that we can see this is through daily active deposits, which is, like I said, the amount of addresses that are being used to funnel comp to centralized exchanges. So similarly, after a period of decline, as the price of comp began to rise, so did the amount of daily active deposits. And if you go back over the last 6 months and you look at similar spikes in daily deposits, you can see it marking tops, marking tops, marking tops, marking tops, marking price tops as well. So it's obviously it's not a silver bullet, but it's no surprise that you would sometimes see spikes in daily deposits around local price tops, because all it suggests is that a lot of people, a lot of holders, at least relative to the usual level of activity on Compound's network are moving away from the coin, are starting to take profits and reduce their exposure because they're afraid that this rally is not going to last for long. And so the one more thing that we have seen, actually two more things that we have seen for Compound that suggested to us, okay, amount of active addresses are declining, amount of sell side pressure is increasing. Both of those combined, not a great sign. Another metric that we've been keeping an eye on is network profit loss. So this metric, essentially what it tries to do is, it's something that we've created at Santiment about 3 or 4 months ago, maybe even more now. This metric tries to calculate the overall daily ROI of all daily transactions on the network. So basically for each unit of Compound that moves on the blockchain, let's say there was a coin that has moved, or a unit of Compound that has last been moved on the blockchain here. So we take the price at which this unit of comp has moved, and we assume that this was its acquisition price. This was the moment at which this unit of Compound has been bought, right? And then the next time that that same unit of Compound moves on the blockchain, let's say it moved here, we take the price at which it moved here, and we assume that this was its sell price. And so the difference between the acquisition price and the sell price of each unit of Compound moving on the blockchain daily becomes this metric. So the idea is, when you see spikes in this metric, it indicates a period of profit taking, where people are moving their coins at an average profit relative to the last time those coins have been moved. And then when you see drops in this type of a metric, it suggests short-term holder capitulation, or periods where there's been a massive decline in the amount of comp. There's been a massive loss that comps holders are experiencing relative to the last time these coins moved on the blockchain. So I'm going to zoom in here to show you what's been happening for the last month of comp. So this is last 30, last 40 days of Compound's network profit loss. And very clearly, we can see a period of large drops in Compound's network profit loss. And this makes perfect sense because, Compound, just like many coins, have experienced a massive correction since the May and April days. So it would make sense that a lot of people are now looking to sell their bags, and some of those people are selling their bags at a loss. People that have acquired comp and acquired other tokens during the March to May rally are now fearful of further correction. So they're taking their chances and they're moving out of these coins before it's too late, according to them. However, for the first time in a while, we have seen comp's network profit loss move away from capitulation into profit taking. And this is, again, a period of a strong sort of sentiment pivot towards a coin that can often indicate the coin is becoming a bit too overvalued. It's becoming a bit too leveraged, or generally more people are starting to reduce their position and increase sell side pressure. And as a result, almost immediately we have seen another sort of short-term correction for comp. Now, what's even also more interesting, and I didn't actually mention in this report, is that although sometimes these spikes in network profit loss, or basically signals of elevated profit taking, are going to indicate a period or a risk of short-term correction, what's also interesting is these massive drops in network profit loss. So what this basically indicates is that at this point in time, coins moving on the blockchain are moving at a massive loss relative to the last time they moved on the blockchain. Now, obviously we need to take all of this with a grain of salt, because network profit loss as a metric, it makes some assumptions that are not always right. Right? So network profit loss assumes that all transactions on the network are speculative. They're either buys and sells. There's, according to this metric at least, there are no other use cases for a coin other than buying and selling that coin. That's why network profit loss is better, in my opinion, for something like Bitcoin than for coins that have a bunch of different use cases like Ethereum, right? Still, that being said, I think for a lot of like low and mid cap coins, they're still mostly just speculative assets. So I think network profit loss works fairly well, although it's not perfect. I think it's a good gauge of the average sort of sentiment of its holders. So this is something that we see quite often, and I'll show you in Bitcoin's case a very similar pattern where there are these massive drops in net profit loss, which essentially suggest short-term capitulation. People are, or weak hands, are moving away from this coin because they can no longer afford to hold it. They believe that they were only going to keep correcting, and as a result, these sort of points in time have a tendency to earmark short-term price recoveries. And as you can see, these massive drops in net profit loss have come right at the sort of bottom period, bottoming out for Compound, and before this short-term recovery. If we look at Bitcoin, we can see a very similar pattern. So this is net profit loss for Bitcoin. The three biggest sort of drops in Bitcoin's net profit loss have occurred here at the first sort of bottom before a short-term recovery, here at this next bottom before a short-term recovery, and then here at this point in time, sort of an interim bottom and before a short-term recovery. So although, like I said, it's by no means sort of a magic bullet or silver bullet or whatever, the only thing that these dips basically reveal to us is that there seems to be an increased amount of fear in the market, and there's an increased amount of uncertainty and anxiety about that coin. And sometimes, not always, but sometimes, accumulating when there's blood in the streets can be an interesting or an opportune strategy for traders, right? So moving back to Compound, just one other thing that I wanted to mention. The last metric that I wanted to show is MVRV. So MVRV is a metric that we use quite often at Santiment. Yeah, go ahead.
Hey, so I'll pause you right there.
Sure.
There's one question from Ben Poir. Ben, thanks for the question. I'll just flash it up here. So Ben would like to know, what would having these added levels of transparency or transparent data analytics benefit in the financial world, possibly creating better, smarter algo quant trading bots? Would you like to? Sure. Yeah.
I mean, does he mean would that help in the would that help with the quantitative trading and modeling in the traditional markets? If that's the question, absolutely. I think we as a company we sell this data not just as a platform, which you're seeing here. Essentially, what you're seeing on your screens right now is our retail-facing platform, which is very sort of oriented to people that are not necessarily super experienced with on-chain data, social data, development activity data, and they kind of want this very easy approach to on-chain analytics, where they can click on a chart and they can see some metrics. However, we also sell this data through our API for people that are very much used to leveraging this type of data into their backtesting, creating models, creating algorithmic trading bots, and so on and so forth. So in our experience, this type of data has been sort of rising in popularity as a way to improve your trading strategies. Obviously, we don't have clear. We don't ask, or we can't ask all of our clients, what is your profitability like since you started using our metrics? Nobody's gonna tell you that. However, we have been definitely seeing an uptick across the board in the amount of interest in these types of metrics for trading purposes, and I think it would make a lot of sense for traditional markets as well. However, I just don't see a way to leverage this type of data in financial markets. Like, there's just no way to access unless like you have some privileged exposure and you can front run some moves. There's no way for you to leverage this type and this amount of information in traditional markets. It's unprecedented, the amount of transparency that blockchain has allowed us, and a lot of that transparency can be sort of molded into actionable indicators and potential alpha, and that's kind of what we're trying to do with our platform, if that makes sense.
Cool, thanks for that, Dino. I look, Ben, I think from my perspective, so you're talking about traditional. Sometimes you don't know when a very large holder, how do you know that a very large holder is deciding to sell So with on-chain analytics, for example, you can see that a large amount has been sent to an exchange, and then from the exchange, I mean, why else would they send their coins to the exchange for? I suppose Dino mentioned these days you can stake them, and earn interest on them. But sometimes if you kind of put two and two together, right? You look at a whole bunch of indicators, and then you come to your own conclusion. And
exactly.
And if you have a lot of data in time series, and statistically, every time a large amount goes into the exchange, and then do you correlate that sometimes maybe with price drops? Then okay, well, this guy's gonna, they're sending their coins there, and then there's a lot of sell side pressure. Now, if that happens, if you could see that with the larger players in the stock market, wouldn't that be interesting, right? A large hedge fund sending, that they're gonna make a move, right? Because you see that coming. So that's my answer. Sorry to interrupt you, Dino, but hey, look, that's a great question. Anyone else out there, don't be shy. Just throw those questions in there. Keep coming. These are good questions. All right, back to you, Dino.
Thanks, Andrew. So yeah, I mean, I agree with pretty much everything that you said. If anybody, like Andrew said, has any questions about on-chain metrics or anything else while I'm here, just let me know. Also, if you are interested in this type of data, we do have our own weekly streams on Fridays. So tomorrow at 4 p.m. Central Eastern Time. So essentially an hour and 10 minutes from now, tomorrow, on our YouTube channel, we will be going live and analyzing the market from a bunch of different angles, and also taking some questions from the audience as far as the type of coins that they would like us to analyze. So if that sounds interesting to you, check out Sentiment's YouTube channel. Just go to YouTube, type Sentiment, and you'll find us. So yeah, anyway, back to so the last sort of indicator that I wanted to showcase here is NVRV ratio. So this is something that a lot of people have been very sort of vocal about. I think most on-chain analysts are very familiar with this metric, and they've been starting to use it more and more. We've been getting more and more inquiries about this, in particular because at Sentiment, we also provide NVRV ratios for all Ethereum-based coins, which not a lot of data providers offer, as well as the fact that we also have these time-bound NVRVs like you're seeing right here, which no other provider on the market has. So let me first explain what NVRV is. So NVRV is an on-chain indicator that tries to visualize the average profit or the average loss of a certain group of holders, right? So at the moment, we are looking at a 30-day NVRV ratio. What that means is that we are looking at the average profit or the average loss of all addresses that have acquired comp in the previous 30 days. So at the moment, for example, comp's 30-day NVRV is plus 20.82%, which suggests that at this moment in time, on average, the profit of short-term comp holders is about plus 20%, which makes perfect sense given the fact that we have seen this type of, very strong uptick in the price action of comp lately. So the way that people use this metric, first of all, this metric is much better used for coins with a lot of historical data, because it is necessary to sort of establish historical patterns and historical trends in order for this metric to work its best. And I can show you in Bitcoin's case exactly how we use it. But sometimes it can be used for like coins with not a lot of, that are relatively young as well. So like, for example, Compound has only been around for like a year, maybe just slightly longer than a year. It's not a whole lot of data to go by, but I still wanted to show what our NVRV is suggesting here. So the way that people use this metric is that the higher the NVRV ratio is, the more profits, unrealized, unclaimed profits there are, and the more likely it is, or the greater the risk is, that holders are going to start claiming those profits. So for example, right, when we see here that the NVRV is at about plus 37%, that means that on average, short-term compound holders are about plus 37% up on their initial investment. So the higher this level this number grows, the more likely it is that they are going to, start taking some profits, because they are going to start, experiencing fears that this rally is no longer going to be sustainable, and in general, they're going to be, more and more risk averse as the rally continues. So overall, the higher the MVRV ratio, the more likely it is that we are going to be seeing some amount of profit taking, and as a result, the price is going to normalize in the short term. And then the lower the MVRV ratio is, the more undervalued the coin is according to this metric, and therefore it could be an opportune time to accumulate. So historically speaking, we have seen Compound's MVRV ratio sort of, once it hits these levels at about plus 15%. 15 and 20%. So I can even draw a line here just so you can see it. So this type of level of MVRV ratio has usually been a period, or sort of an established danger zone, so to speak, or a moment in time where MVRV ratio becomes extremely high in historical terms, and as such suggests that there's going to be an increase in sell side pressure, and therefore also a possibility that we're due for or primed for a short-term correction. Like, even when Compound's MVRV ratio manages to break above these levels, it doesn't stay above these levels for long. And it sort of almost immediately drops back to relatively low levels in order to continue its price action. So what we've seen more recently here on July 7th, is that Compound's 30-day MVRV has gone as high as 55%. So it's one of the sort of highest levels of Compound's MVRV ratio, 30-day MVRV ratio since the start of the network. The only other time that we've seen this type of activity was around its February top. So it was another sort of sign that in the short term, we might see a normalization of these metrics, as well as, and in order to see a normalization of these metrics, we're going to have to see a short-term price correction, and that's what happened as well. So if I show you Bitcoin's MVRV ratio, and let's take maybe last 3 or 4 years. One day. Let's take 3 years, should be fine. There we go. So this is Bitcoin's 30-day MVRV ratio, and we can see that at these sort of levels, Bitcoin's 30-day MVRV ratio usually becomes unsustainable, and only these sort of protrusions, even if they happen, they only last for a couple of days before we encounter a short-term correction. And then on the lower band, we see that there are sort of two support levels, you can say, for Bitcoin's 30-day MVRV ratio. So this is the first one, and you can see several times how we've bounced back off of this level of about minus 15%, and then another one, a massive one, which we saw both during the May 26th bottom, as well as here on November 26th as well. Now, this is a coronavirus crash, so it's a massive outlier, but it's also a very sort of, it was a very clear sign that we're historically undervalued, and that as a result, it could be an opportune time to accumulate, because the MVRV ratio is so low. People are undervaluing this coin massively. There has been a massive sort of capitulation network-wide. So if you believe in the coin overall in the long term, these types of levels are usually unsustainable and would have to sort of move back onto the upside, which did happen. So these are some of the metrics that I wanted to showcase. We haven't really talked much about social data. So today, mostly the things that I talked about is related to data directly from the blockchain, right? Like I mentioned at the beginning of the call, we also provide information about coins, not just from an on-chain perspective, but from a variety of other perspectives. Something that we are unique by is we also provide information about the social activity of particular coins. And what I mean by social activity is we have a data set that we've been building over the last 3 years that includes over 1,000 different crypto-related social media channels. So at the moment, we track Telegram groups, crypto subreddits, Twitter accounts, pretty much everywhere, other sources as well, pretty much everywhere where the main topic of discussions are cryptocurrencies. We'll listen into those conversations. We scrape that text data. Currently, we collect about 100,000 new daily messages from crypto social media. And the thing that we do with this data is we have created several metrics. Metric number one is basically just social volume, and I can show that to you in an example of, let's say, Matic. So social volume as a metric simply shows you the amount of mentions of a particular coin on crypto social media, right? And something that we have seen very often is this type of a pattern where massive spikes in social volume, especially when they happen as the rally, intensifies, usually indicates that the crowd is becoming a bit too overconfident, overzealous, too greedy, and as a result, we might see a short-term downtrend as well. So it's happened several times in Matic's recent past. And then the next level of abstraction that we've achieved with these metrics is not only looking at the total amount of mentions of a particular coin on crypto social media, but also the average mood of these mentions. So we've taken the same data set and we've parsed it through a machine learning algorithm that labels these messages as positive, negative, or ambivalent. And the end result is a metric like this, which shows the weighted social sentiment, or essentially the average sentiment towards a particular coin on crypto social media. And you can choose a source here. Usually I use Twitter because it's where our data has been trained to label messages as positive, negative, or neutral. This is what, for example, Bitcoin's average sentiment looks like right now. As you can see, as soon as we dropped down to there was sort of an ascending triangle here, and as soon as we dropped below it, there has been a pretty major correction, or sort of a major drop in Bitcoin related sentiment. So it seems like a lot of people at the moment are extremely bearish towards, on average, towards Bitcoin as an asset. If we look at Uniswap, I think there are some interesting patterns here as well. Yeah, so Uniswap, first of all, you can see that similar to social volume, where large spikes indicated that the crowd is becoming a bit too greedy and a bit too confident. You can see the same spikes in Uniswap social sentiment, essentially suggesting that on average, the mood towards Uniswap as a coin is becoming too bullish or very bullish. So, and there's a possibility that we're going to see a short-term correction, which we've seen several times in the past. And so more recently, as Uniswap started to recover, we have seen a cluster of bullish sentiment spikes, which in general is not a great sign, because it suggests that we are slowly but surely moving into an overvalued territory for the coin in question. So this is also the type of information that we offer on the website. Don't want to go too deep into it because I think we're already an hour in, and I do want to see if there are any other questions that we can answer, Andrew. But people know that they can also find this type of data on the website.
Yeah, definitely. Now, thanks, Dino. Look, there's so much data and information on sentiment. It's amazing. Like I use it all the time for my analysis. Okay, so there is a question from Alex Winifred. He wants to know, where do you think BNB is heading?
Oh, well, I mean, very interesting question that I don't even know how to answer. I mean, one thing that we have seen. Well, first of all, let's see what is the sort of the. I don't know if we have sentiment for Binance Coin. We probably do.
Look, obviously, none of this is financial advice. This is just us looking at data and trying to interpret what the data means. And it's just two friends having a chat on the live stream. So do not take this as financial advice, and do not make any investment decisions without first consulting with your financial advisor. Okay.
Right. For sure. So I'm looking here at the BNB on on Ethereum. So obviously there has been a lot of FUD about Binance recently. This FUD has been propped up by a number of different things, most notably Binance's all of a sudden regulatory issues. First started out of UK, and then I think there were a few different sort of countries, and then yesterday or the day before, Binance has lost their SEPA gateway, which is a huge thing in my opinion. So at the moment, it seems like Binance as a brand is in a little bit of damage control mode. That being said, I think Binance Smart Chain, is still being used quite often. There's projects like PancakeSwap that I think are still performing pretty well, all things considering. They are not on the same level of activity as sort of Uniswap or even SushiSwap, but for a relatively young network like Binance Smart Chain, PancakeSwap is doing pretty well. I think a lot of it is going to come down to just how good CZ is at promoting himself out of this mess that Binance is currently in. Like we can see, at least on the Ethereum side, this is the BNB's coin on Ethereum. Its on-chain activity has kind of plateaued for a while now. So I would probably like to see a little bit of a stronger or a more sustainable uptick in its daily on-chain activity. We can also see, not exchange inflow because it's on Binance. We can see, however, let's see age consumed actually. Okay, yeah, so H consumed is a metric that tracks the renewed movement of coins that have not been moved on the blockchain for a long time. So, for example, when you see these types of spikes, it suggests that coins that have not been moved on the blockchain for a very long time, so long-term holders, are starting to move their bags. At the moment, it doesn't seem to be happening on Binance, so its long-term holders seem to be waiting, or they're not panicking at these levels of activity. We can also look at the overall transaction volume on Binance. I am curious to see what that looks like. And yeah, so if we zoom in here, you can see that obviously there are several big spikes that kind of skew the data or make it seem a bit low. So let's zoom out of it. So this is the on-chain transaction volume for BNB's token. Basically, the total amount of BNB that is moving on the blockchain on a daily basis. And similar to daily active addresses, some people also use on-chain transaction volume as a sort of gauge of how much a network is utilized, and also what is the amount of value that is being transmitted on the network relative to its market cap. Like maybe some of you have heard about the NVT ratio, which essentially just takes a coin's market cap and divides it by on-chain transaction volume. And then, if the amount of transaction volume on the network is very low relative to its market cap, it means that its market cap is too high. It means that it's overvalued relative to just how much activity there is on the network on a daily basis, right? So I would assume that currently it is pretty low. I think it's declined a little bit since the correction, and in general we're not seeing any sort of strong moves on the upside in terms of general interest in BNB. But I think BNB lives and dies with CZ. So it's going to come down to exactly how good he is at damage control, and I think he has so far proven to be very good at damage control. And it's going to also come down to the adoption of Binance Smart Chain. So you can't, like, for these types of coins, it's I don't think it's only interesting to look at its token level metrics. It's also very interesting to look at general sort of news and the protocol level metrics. So, how is Binance Smart Chain comparing to Ethereum over time? There has been a point in time a couple of months ago where Binance Smart Chain has just been, in terms of active daily active users, has just mushroomed compared to everything else, at least in percentage changes compared to even Ethereum. But since then, it's kind of the last release charts or stats that I've seen, Binance Smart Chain has sort of started to dwindle in terms of its daily activity. So if that continues, I think Binance coin is going to probably drop in value as well, because a lot of people currently associate BNB's value with the amount of interest in the underlying protocol. So that's sort of the long-winded answer of saying, check out what CZ or how CZ is going to get out of this current situation that he's in. And second of all, keep an eye on Binance Smart Chain's adoption over time. There's a couple of metrics on our website and on other websites that you can use to look at the Binance's progression in terms of their Ethereum competitor.
Cool. And thanks for answering that, Dino. Look, I think we've gone past the hour. Thank you so much for coming on again, tonight to share the insights. It's always great to have you on. And as I said, for those of you who are still with us after listening after listening to us for over an hour, remember, Dino is from Santiment, and he dials in from Europe, and he is on every second Thursday of the month. And so we're very lucky to have Dino on and come on and answer our questions and share with us. Look, we've got a question from Necromastery Asli. Between Ethereum, Cardano, Polkadot, and Solana, choose one. Look, I'm probably not going to answer that, but yeah, look, guys, look, thank you for tuning in. I hope you enjoyed the content. And look, if you are here for the first time, remember, if you're tuning in from YouTube, or remember to subscribe and remember to follow us, right? And hit that notification button, so every time we're on or Dino's on, you'll be notified. Again, if you're on Facebook or if you're coming in from Twitch, just follow us so that you're notified each time we're on. Dino, any last words?
Yeah, I mean, since we do have our own native token, I don't really talk about it all that often on these calls, but it does live on the Ethereum. So, I contractually probably need to pick Ethereum as the network of choice. No, but all the jokes aside, I would probably just pick Ethereum from a decentralization standpoint, at least. Obviously, there are other issues. The biggest one is going to be, what ETH 2.0 brings and whether it ever arrives. If it doesn't, then yeah, there's a danger that other networks are going to be able to take more of a mind share and market share from Ethereum. But for the time being, I don't think that's too much of an issue. But we'll see. We'll see. It's definitely ramping up. Ethereum is no longer in as dominant position as it's been even a year ago. So it's going to be very interesting to see how the battle progresses over the next 2-3 years.
It is an interesting space.
Yeah. But anyway, thank you for having me, Andrew. Like I said, last words, just check out app.santiment.net. Everything that I showed and a lot of other metrics are available. Once you create an account, there's a 2-week trial, and you can basically look at all of the metrics on our website. There's more than 150 different indicators. And also, if you like this type of information and like this type of data, make sure to check out Santiment's YouTube channel tomorrow at 4 p.m. Central Eastern Time. So an hour from now, just tomorrow. So basically 13 hours from now. 25 hours from now. We will be going live on our YouTube channel and talking about the market, more specifically Bitcoin and Ethereum, and then we'll be taking audience questions about which type of coins they would like us to analyze live during the stream. So if you want to keep talking about interesting fundamentals, make sure to join us tomorrow at 4 p.m. Central Eastern Time.
Fantastic. And with that, look, thank you everyone for tuning in. Stay safe, stay home, and yeah, take care. And thank you again, Dino, for coming on.
Always a pleasure, Andrew. Thanks for having me.
All right. Thank you, everyone. Bye-bye.
Bye, guys.